As mentioned, I'm Laura Ward from CLA. I've been in public accounting for a little over 20 years now, working in the automotive industry way back when with the manufacturers, and now most currently with dealerships of various sizes and types, whether it's independent dealers, buy here, pay here, new car dealers, heavy duty truck dealers, bus dealers, RV and power sports. So a lot of variety there, and thank goodness that everyone is doing well in 2021 so far. You know, some of the dealership trends that we see with our clients are various, but most of it's pretty similar. We're also going to talk a little bit about how to save some money and what people are talking about most recently, related finance companies, accounting, fraud, and some of the latest accounting updates that you may or may not know about. So what are we seeing with our current clients in 2021? So far, 2021's been a good year. Some special situations may not have been so great. It just depends on location, demographics, and that type of thing. But for the most part, 2021 has been looking good for our dealership clients. Obviously, inventory prices are up, and that's causing a ruckus, especially with some low inventory on lots of dealers that we're working with. Just had lunch, and one of the dealers over there said they're having no problem. So depending on who you're buying from and where those deliveries are coming from and who you're selling to, that might not really be as much the case, but most people are seeing that inventory shortage. PPP loan forgiveness. Most of our clients have been reaching out for months asking for our help with the PPP loan forgiveness application and how to best fill that out. A lot of folks have people in-house in their resources. They can fill that out on their own, but others are really wanting some help there. So if you haven't already received forgiveness for PPP loans, definitely get that process started and reach out for help if you need it. We're also seeing our dealers reaching out to build relationships with new financiers and lenders. Bank relationships are changing. People are looking for better interest rates. And what does that mean for us in the accounting world? They need help with financial statements, and having a good balance sheet and income statement to share with these new banking relationships is important to them. And then we're finding that, you know, maybe they don't have the resources in-house that understand the accounting as well as they need to be providing good financial information to the bank. Employee retention has been a big focus, not only in the dealership world, but across all clients that we work with. Talent is hard to find. People have been going different ways with the various remote work arrangements and you know, attractive offers out there from other types of industries and employers. So how can we retain our own employees and keep that talent happy? Some of our dealers, a lot of our dealers are looking for ways to save money, and that brings them to revisiting tax strategies. And am I set up properly? Should I be an S Corp? Should I be an LLC? If I'm an LLC, should I be taxed as an S Corp? And where do they fall in that? Buy here, pay here's want to know how they can save money by setting up an RFC. When is the right time, and how do I do that? And reinsurance companies. You may or may not be familiar with reinsurance company structure, but that's another way to keep your money in one place under your own ownership, saving money through that from a tax strategy as well. So a lot of topics out there that we're talking about as accountants with our clients this past year. As far as the tax strategy goes for related finance companies and a buy here, pay here, we want to think about what that means and how does the tax work with that. Does it mean that an RFC should be set up for any type or any size buy here, pay here, or is it just the ones that are small, or is it the ones that are larger? A lot of people want to set up an RFC just to make sure they're in compliance with the IRS and doing things correctly, but they don't realize that there's a certain point where it makes sense. And where it makes sense is when you have a tax benefit. So until you're large enough where you're generating some significant taxable income, it may not make sense quite yet to set up an RFC because there is cost to that benefit, right? Once you set up an RFC, there's accounting to go through, and so you have 2 sets of books now, and what does that look like? From a tax perspective, you're charging a discount on the dealership when you're selling the notes over to the related finance company, creating less taxable income on the dealership, and then the taxable income flows over to the RFC, but not at the time of sale. It's at the time of collection, because the way that the accounting works, you're charging a discount on the dealership, creating a loss, but then on the RFC, that discount is unearned income, and it's not earned until those cash collections come in. So you're not paying tax until those cash collections are coming in, so it helps with cash flow, and you're not paying the tax right up front when you just have the dealership. That typically does not need to be done until you have taxable income at the dealership level. When is it time to set up an RFC? When your portfolio grows. Some people like to set it up sooner than later, but again, the administrative burden is there, so you want to make sure the timing is right. So a lot of times our clients are asking us for some analysis to say, how much money would I be saving? Is it worth it yet? And how much longer should I wait? Setting up an RFC does have its costs, time and effort. You have to set up a new entity. You need to have separate bank accounts, 2 separate sets of books. You need to have employees, your own address. There's a whole variety of things that need to be taken into consideration. And there's an IRS RFC checklist that is a couple pages long that goes through all the things that you need to consider when setting up an RFC and making sure that you're following those guidelines. So from a tax perspective, you may be saving some money in tax, but then on the administrative side, there's some cost there. So looking at that cost benefit and timing and when that makes sense. And that comes down to dealership accounting. And since I'm an accountant, I love to talk about accounting, so hopefully I don't put you all to sleep. But keep it light and simple, and we'll talk through here. Most dealerships have a small accounting department. The resources aren't there to pay 5 or 6 people to keep your books and run the accounting side of things. Usually we like to see all of these, controllers, bookkeepers, accounting managers, and maybe even the owners involved, but for the most part, only one of these people are involved with the accounting of a dealership. So what does that mean if you just have one of these particular people doing the books of the dealership? Maybe the office administrator is doing the books and everything else, right? They're usually pretty tired people. But that shows us that there's a lack of internal controls, because when you have that small accounting function, then you're not able to have the right set of controls as far as segregation of duties go. The quality of financial information is not always there because there's just no time. Just recording those transactions, doing the day-to-day work, the financial statements of the company or the dealership are not up to par. And there's room for fraud when you have a small accounting department with a lack of controls. So what can we do as dealers to keep an eye out for things and making sure that the fraud doesn't occur, that the segregation of duties are in line and as best as we can do with the size that we have? Well, first, let's take a look at your accounting department. What size is it? How many people are in it? Is it just a 1 person? Is it 2 people, 3 people? No matter what the size, there are always things we can do to help with the segregation of duties and control side of things. Do you have someone with a financial background, or are the folks that are working in the accounting department really just entering information and entering the transactions, paying bills, and taking money to the bank? Having a small department with just a few people working in it also is option for fraud, right? Opportunity for fraud. If there's not somebody else looking over their shoulder, reviewing their information, maybe there isn't someone knowledgeable about how accounting really works, and so someone can pull the wool over somebody else's eyes that's not paying attention or doesn't know. Some of the red flags that we see are up here on this chart. But a lot of times you can tell somebody's living beyond their means. We know how much they're getting paid. We know what they're doing, and sometimes it shows that they're living beyond their means. However, that's not always the case, because who knows, their family may be wealthy, they may have a spouse that makes good money, it's none of our business, right? But a lot of times that's what we're seeing when fraud occurs. And I'll give you just one example. One of our clients, they had an accounts payable clerk who got the bills ready to be paid, printed out the list of invoices to the vendors, and had the controller or owner review it. They said, great, this looks good, go ahead and pay it. She went back and ran all the checks, and at that time they had a stamp for all the checks. And instead of the owner or the controller, whoever was in charge, instead of them looking at the checks and stamping them, they trusted her. She's been there a long time, always did what she was supposed to do. They let her stamp the checks when she was finished running that check run. Well, lo and behold, the next couple months went by, and we were talking with the team, and they had to fire her. Well, she got the list of checks approved. She went back and printed the checks. But when she went back and printed the checks, she changed the name on one of them and printed it, stamped it, and cashed it. Well, that check was to her. So just keeping track of who's doing what and do they have the opportunity to commit fraudulent activity is very important. So making sure that somebody who is a lower paid accounts payable clerk who's building a brand new house, you never know. That could be a red flag. Financial difficulties is another one. You just don't know when people are having issues, whether it's with their children, their mother, their spouse, and bad times happen. So that employee who's been super honest and around and loyal for a very long time, there could be something that comes up to where they are having difficulties in their personal life. They don't know where to go. They don't know who to turn to, and they start taking from the company. Not intentionally that, I'm going to defraud this company, but I'm going to borrow this money and pay it back someday, but that chance never comes. So just making sure that you are aware of who has access to what, and that the person that's writing the checks isn't also signing the checks and doing the bank reconciliations and taking the money to the bank. A lot of times that segregation of duties is not there in small accounting departments and opens things up for fraud. Some segregation of duties that we can think about as we're growing our business, as we're tightening those controls. We want to look at the preventative controls that prevents fraud versus the detective controls. Detective controls are ones that help you find fraudulent activity. Well, we want to focus on the preventative ones so that fraudulent activity doesn't occur. On this slide, it just gives a little note here to try to alternate tasks so that one person isn't doing everything. Also, a good thing to do is to cross-train those couple people that are doing things. So if one's on vacation, the other one can do their job while they're on vacation. Maybe they alternate job duties every couple months so often so that other people are seeing what's going on. But definitely wanting to separate the function of authorization, payment, custody of assets, and recording. One of my bus dealers that I used to work with, their accounts receivable person was super positive, probably the sunshine of the office, and she had been with the company for a long time. Things got difficult, and the accounting department was downsized, and her duties included entering the accounts receivable, updating customer accounts, preparing the bank deposit. So they had their parts department where they were selling parts for cash, credit card, what have you, and it was found that every time there was a deposit put into the safe, that her duty was to take out that deposit, compare it to the sales slip, make sure that the information was right. She would then write up a new deposit slip and put everything on there, all the checks were on there, but never was the cash on there. And it took a while for people to find out, like 3 years. because the way she was making everything balance in the system was changing customer account balances. And she made up an account called miscellaneous receivables. So over the years, a couple $100,000 was taken. The CFO was devastated because that happened under his control. And here she was, one of the most trusted employees, but because she had access and the ability to do all of those things, that was able to happen with people not realizing. So just making sure that we're aware of who's doing what and just protecting the person as well as the company to segregate some of those duties where they're not able to do everything without somebody noticing. Even if there's just 2 or 3 people, there are ways to segregate duties to make sure that's not happening. And just a little bit of oversight, even once a month would be helpful. Provide employees fraud awareness training. Let it be known that it's okay if you see something that looks funny or that's wrong, come talk to me. Let's figure it out and work together and move things forward. Establish passwords, making sure that access to certain things are only accessible by certain individuals. And as we've been talking, just aligning responsibilities, making sure somebody's reviewing things, approving things, and keeping an eye. Looking at bank statements. A lot of times I'll have clients where we do very minimal work, but when I get the bank statement, I just kind of scan through and say, hey, what are these amounts going through here? Do these look right? The list of wires and ACHs, it's very easy to see a vendor name or a payroll company's name, an IRS payment, but when there's nothing there and it just shows a bank account number, I kind of look at that to say, hey, is it going to a bank account of the dealership or is it going somewhere else, and what bank account is that? I had a client that the controller had access to wire funds to vendors and there wasn't separate approval or a separate alert going to the owner or somebody else in the company. And they found out after about 8 months that she was wiring funds to her own personal account to pay her mortgage. Finding out that it was at the same bank raised a red flag to me because I would think the bank would have controls in place to see that something was going from a business account to a personal account within the bank that didn't make sense. But that was not flagged, so just keeping that in mind. Who do you have doing wires and ACHs and who's approving those? Require monthly reconciliations, making sure that the DMS reports are matching up to the accounting system, making sure that bank reconciliations are done. Most of my clients are looking at cash on a daily basis and truly doing a full reconciliation every month, but daily reconciliations are done as well. So we want to make sure that some of these controls are in place to eliminate fraudulent activity going unnoticed, and a lot of times errors would be noticed as well, and those can be corrected much sooner than later. Perform surprise audits. One of our clients that we do bookkeeping for on a regular basis, we went out to lunch and they talked about their daughter, their daughter-in-law that's involved with the business and making deposits, and she's a fraudster all from the beginning. They don't like her daughter-in-law, they don't trust their daughter-in-law. And so something that we suggested to them was very simple and very easy, that when somebody sets a contract with a client, you've got the contract amount that's on the signed contract. That amount is the total of the sale, what's the down payment, and what's the amount of the customer note. Well, it's very easy for someone to go in the system and say it was a $9,000 sale, there was no down payment, and the $9,000 sale is recorded. Well, if the customer contract says it was a $10,000 sale with $1,000 down, that doesn't match up to the system, right? So that is a very easy way to just spot check and say, hey, let me look at these 5 customer contracts of the month and see that the amount on the customer contract matches what went into the system, because I don't want that $1,000 going to my daughter-in-law without me knowing. So just some surprise audits that you can do, and that doesn't mean you have to look at everything, but just a sample. Being an auditor for over 20 years, I always pick a sample of 10, 20, 25 out of hundreds of transactions, and every time my client says, oh, how'd you pick that one? That was the only one that was like that. And so just picking samples will give you an idea of what's going on. So not to feel that you need to audit anything completely. Open the mail. Every once in a while, take the mail and look at bank statements. The owners might want to have bank statements going to their house just so that they have a copy of them. Go online these days. You don't need to have anything mailed. So go online and just kind of scan through the bank account. Prove out those bank reconciliations every month. Make sure there's not some random plug number or adjusting line item. Why is there an adjusting line item? They should have outstanding checks, deposits in transit. What are these adjustments for? And making sure you're understanding those. Review your vendor list. Who are we paying and why? Do we need 6 vendors for this particular supply? Making sure we're reducing the amount of vendors we're using where it makes sense and that we're not paying somebody's neighbor for some random services that may not be for the dealership. I think we went through most of these here on this slide, but one of the things I wanted to mention was payroll. I have a client where their controller is very capable and competent, but the owner pretty much has him do everything. Any type of question I have for the owner, oh, the controller knows everything. He knows how to access that. Let him give you the answer to that. Okay, great. So then when I talk with the controller and talk through the things that he does, I'm like, I'd hate to be this controller, because if anything were to ever happen, the fingers would be pointed at the controller. So in talking with the controller, just to kind of CYA himself and cover his own butt, I said, you probably want to make sure somebody else is doing that, and if the owner doesn't want to review it, sit down and make him review it with you, because otherwise, when something happens, you're going to get the finger pointed. An example for payroll was that the controller calculates the commissions, and he calculates it in an Excel spreadsheet. It's not reviewed by the owner, because that's who is the only person other than him that's in that authority position. Sent to Paychecks to process the checks, and they get paid. So in talking with the controller, I said, does anybody ever review your calculations to make sure that you're doing things correctly, or there wasn't an error in your typing in Excel and somebody got too much or too little? And nope, the owner trusts that I can do this. And I said, well, I trust that you can do it too, but everybody makes mistakes, and sometimes calculations aren't done correctly. But in talking with the owner, he didn't review payroll reports. Somebody that the controller knew, his neighbor, could have been on payroll. Commissions could have been extremely overpaid. Some could have been underpaid, but either way, you want to be looking at payroll and who's being paid. Do things look correctly and are consistent on a regular basis? But that was a big one that could definitely be missed, that controller and I, when we had the conversation, there were a lot of holes around payroll. And to true accounting topics. So you might have accountants or CPAs that talk to you about your financial statements if you get regular compilations, reviews, or audits. And the new lease standard is out there, so just be aware that all the operating leases that were previously just expensed as paid are now going to have to go on the balance sheet. So if you have regular financial statements prepared under generally accepted accounting principles, leases will be required to be put on the balance sheet. There are some nuances to that, but just so that you know that's out there, that will be effective for years ending 12/31/22. So either bankers or your accountants may be bringing up the conversation there. Excuse me? No, it doesn't change the cash flow. It doesn't change the profitability of the company. It just changes the presentation. So in the past and currently, when you have a lease agreement and you pay that lease, it just comes right out of your cash and goes to your income statement. Nothing is sitting on your balance sheet as a liability. And so under this new rule, you're going to have a right to use asset and a related liability. So now that's going to affect your balance sheet. And people don't like that because they don't want this liability on their balance sheet. They don't even want the asset there either because that's not what they're used to. They just want to show it the way they usually show it. Banks are just learning about this as well. Some of the large banks already know about it. A lot of smaller banks it's new to them. And we're talking to them about it because some of the calculations and ratios that they're requiring their customers to calculate will need to be revised a little bit to take into consideration the new balance sheet items related to the leases that companies incur. So just know that's coming out next year. And then current expected credit losses is also known as CECL in the financial institution world. But with buy here, pay here's and having installment contract receivables, CECL will be coming into effect in 2023, and that is really looking at your loan loss reserve. And currently, generally accepted accounting principles really only have you look at what losses have been incurred in the last 12 months, whereas under CECL, you're going to be looking at past historical information, expected losses, and kind of future forecasts of those. So it will be a much more conservative and judgmental approach to the loan loss reserve. Our accounting firm has been pretty conservative over the years, and we take that into consideration when we're helping clients analyze their portfolio. But a lot of other accounting firms have really followed the true historical 12-month period when they're looking at the loan loss. So some of those loan loss reserves are going to be increased based on the new way to analyze your loan loss reserve for buy here, pay here's. So, yep.
So looking at, say, the last 2 or 3 years of static pool, would that suffice in being able to determine what the expected credit loss?
Typically, yeah. So if you have contract terms over 36 to 48 months, you're probably going to want to go back 36 to 48 months and kind of looking at that in your pool to make sure that you're taking into consideration when loans originated and what the related charge-offs were, because maybe something originated 3 years ago and you're just now charging it off and kind of looking at that spread. So we'll want to go back pretty much over the typical contract term that you have. So just know that that's coming out. It's not coming out right away, but that's only 2 years away, and we know how time flies. So with that, do you have any questions for me? All right, one other thing. Cybersecurity has been a huge issue and is always talked about by our IT folks in getting hacked and keeping information safe and making sure that you have great passwords. A lot of people are getting emails, text messages, and it's pretending they're the owner of the company, telling them to wire money somewhere. Don't fall for it. If you're worried about the security of your systems, if you haven't had them looked at for a while, definitely keep that in mind as one of your priorities because it's happening. Did you? Ransomware? Okay. Anyone else have any cybersecurity issues over the last year? Anyone? It's happening, so just be very careful and mindful. Yep. Yeah, what was your example?
Somebody opened an email, clicked the link, and it took down our email servers for a month.
Wow.
We had to get the FBI involved, and they were trying to get a payout to release it, and it was a mess.
Yeah.
And we did end up paying for it. I mean, we had to be able to get access back.
Sure.
But it was a mess. So prevent rather than.
Exactly. Yeah, thank you for sharing. I appreciate that. CLA has a vendor table tonight, so definitely stop by and visit us for some fun swag to add to your bag. And if you have any questions that we can help you with, please let us know. Steve Merrick in the back will be with me tonight, so he probably knows all the answers to your questions. So definitely stop by and visit, and we'll see you tonight. Have a great afternoon, guys.